Okay, so you're ready to like really grow your business, right? But then bam, that loan rejection from the bank kind of hits you hard.
It's tough out there.
Yeah, it's tough out there. You're definitely not alone though.
No, you're not.
Something like 80% of applications get turned down.
Yeah, it's a pretty daunting statistic.
Yeah, but you know the good news is
What's that?
we can unpack why exactly that happens and turn you into like a lender's dream applicant.
Yeah, that's what we're here to do.
Exactly.
It's really fascinating because it often comes down to just understanding what lenders really want to see. You know, they're not just evaluating your business idea, they're assessing your whole financial track record and like your ability to actually repay the loan.
Right. Yeah, that makes total sense. So how do we make sure that we're speaking their language, showing them that we're not just a good idea,
Right.
but a good investment?
It all starts with your credit profile.
Okay.
Think of it as like your financial resume. Lenders want to see responsible financial behavior, both personally and within your business.
Okay, so, and you know that old saying, your personal and business lives should be totally separate.
Right.
That applies here.
Especially true here. Yeah.
So it's not just about having a good credit score.
Right.
There's a lot more to it than that.
Yeah, let's say you've got a 650 score, which is generally considered like fair. You might think, okay, I'm in pretty good shape, right?
Yeah.
But for certain industries, lenders might be looking for 700 or higher.
Wow.
And it's not just the score itself either. It's the details behind it.
Interesting.
Lenders look at things like your credit mix. Like, do you have a healthy balance of credit cards and loans? And then the age of your credit accounts.
Okay.
The longer, the better.
I see.
It shows stability.
Okay, so it's like a credit score deep dive for the lenders.
Yeah.
They're really analyzing every aspect of your financial history.
Exactly.
That's kind of intimidating, I gotta be honest.
It can be.
What if you're a newer business and you just haven't had time to build up that perfect credit profile yet?
Right. Well, that's where building business credit comes in.
Oh.
It's like establishing a separate financial identity for your business. Opening a business credit card and using it responsibly is a good first step. Or you could look into establishing trade lines with suppliers who report to credit bureaus.
Okay.
It's about showing those lenders that your business is a reliable borrower.
So even if you're just starting out, you can start to lay the foundation for a really solid credit history.
Exactly.
All right, credit check. What's next on the lender's wish list?
You want proof.
Okay.
That's where documentation comes in.
Oh, the dreaded paperwork. I knew this was coming.
I know, right?
But it sounds like it's more than just like having your tax returns in order.
Right. It's about creating a compelling narrative with your documents.
Okay.
Think of it as assembling a picture of your business's financial health. You need to demonstrate that you're legitimate, organized, and you have a clear plan for the future.
So what are the must-haves?
Yeah.
The documents that make lenders sit up and take notice?
Well, you've got your financial statements. These provide a snapshot of your business's assets, liabilities, and overall financial performance.
Okay.
Then there's your cash flow projection, which is like a roadmap for your business's future earnings. It shows lenders that you've thought about how you'll generate the revenue to actually repay the loan.
Right.
And, of course, your business plan.
Yeah.
It's your chance to outline your vision, showcase your expertise, and really convince lenders that you're not just another statistic.
Right, because that 50% failure rate for small businesses is pretty daunting.
Is.
Lenders need to know that you're in it for the long haul.
Absolutely. They want to see a track record of success, or at least a solid plan for achieving it.
Yeah.
And even if your business is brand new, there are ways to build that credibility.
Like, what? Give us the inside scoop.
Focus on generating positive reviews and testimonials. Lenders love seeing that other people believe in your business. Build a strong online presence with a professional website. It adds legitimacy and shows you're serious about your brand. And don't underestimate the power of networking, attending industry events, gets your name out there, and helps build relationships, which can lead to opportunities down the line.
So it's like you're saying, even without years of history, you can show lenders that you're the real deal. You're not just hoping for success, you're actively creating it.
Exactly. Every step you take towards building a strong foundation increases your credibility and, in turn, your chances of loan approval.
Okay, so we've covered credit and documentation, the two pillars of a strong loan application. But let's be honest, sometimes even with all that in place, those loan rejections still sting.
Yeah.
Is there anything else that lenders are really looking for something that might be tripping people up?
Yeah, you're right. Those rejections, they can be super discouraging. And Sometimes it all comes down to something that so many business owners struggle with,
Okay.
especially new ones.
What's that?
Consistent cash flow.
Cash flow, the lifeblood of any business.
That's so true.
Makes sense that lenders would be laser focused on that.
Absolutely.
Right.
They want to see that money's coming in regularly enough to cover your operating expenses. And of course, those loan payments, no matter what.
I can see how that could be tricky. Like you
Yeah.
can have great sales,
Right.
but then if your customers are slow to pay or you have a big unexpected expense, it can throw everything off.
Absolutely. That's why understanding your cash flow is so important.
Mm-hmm.
And there are tools out there that can really help.
Okay.
Cash flow forecasting tools.
Oh,
They can be a real game changer.
I see.
They help you to kind of project your income and expenses
Yeah.
so you can anticipate potential shortfalls
Mm-hmm.
and make adjustments.
Wow, that sounds super helpful, especially when you're dealing with all the uncertainty of a new business.
It is.
Are there any other strategies for kind of keeping that cash flowing smoothly?
Absolutely. You can look at your accounts receivable process.
Okay.
Can you tighten things up a bit?
Uh-huh.
Maybe offer like a discount for early payments or switch to electronic invoicing to really speed things up.
Those are great ideas.
And-
Nothing else.
Maintaining a healthy cash reserve.
Okay.
That is crucial. It acts as a buffer for those inevitable lean times. Every business goes through them.
Right.
Think of it as your business's emergency fund.
Okay, so we've got cash flow forecasting, efficient invoicing, and a healthy cash reserve. Those are 3 key takeaways for our listeners.
Yes.
But what if those strategies just aren't enough? What if you need like an immediate cash infusion?
Well, then that's when something like invoice factoring might be worth exploring.
Okay.
It's where you basically sell your outstanding invoices to a third party at a slight discount.
Okay.
So you get the cash you need right away, but it does come at a cost.
So it's a trade-off,
Yeah.
speed and convenience for a percentage of your earnings.
Exactly.
Makes sense. Now, before we move on, I want to touch on something you mentioned earlier, that 50% failure rate for small businesses. It's a sobering statistic, and I think it really highlights why lenders are so cautious. They're looking for reasons to say yes,
Right.
but they're also trying to avoid those risky bets.
Absolutely. And as we're building a strong foundation becomes even more critical.
Mm-hmm.
It's about showing lenders that you're not just another statistic.
Mm.
You're in it to win it.
So it's not just about checking boxes on a loan application. It's about creating a business that's really built to last. What are some of those foundational elements that can make a real difference?
Well, we talked about credit documentation and cash flow. Those are all essential, but it also goes beyond the numbers.
Mm-hmm.
It's about having a clear vision, a deep understanding of your market, and a rock-solid business plan.
And I imagine building those strong relationships with lenders can go a long way, too.
You're absolutely right. Don't wait until you're desperate for a loan to start those conversations.
Yeah.
Open a business account at the bank you're targeting. Get to know your banker and understand their lending criteria.
Yeah.
Building that rapport can make a huge difference when it comes time to actually apply.
It's like that saying, it's not what you know, it's who you know.
Right.
But in this case, it's a bit of both, right? You need the knowledge and the connections.
Precisely. Now, even with all the right pieces in place, there's still a chance that you might face those loan rejections, especially if you're a newer business or operating in like a really challenging industry. And that's why it's so important to remember that traditional bank loans, they're not your only option.
Right. You're talking about alternative lending sources.
Exactly.
There's a whole world beyond those big bank doors.
There is. And exploring those alternatives can be incredibly empowering.
Mm-hmm.
It's about finding the right fit for your business, the funding solution that aligns with your goals and your circumstances.
So let's dive into those alternatives.
Right.
What are some of the options out there for businesses that are seeking funding?
Well, there's the Small Business Administration, or SBA. They offer loans specifically designed for small businesses.
Uh-huh.
These loans often have more flexible requirements and can be a real lifeline for businesses that might not qualify for those conventional loans.
SBA loans, those are the ones you hear about all the time. But what about online lenders? They seem to be popping up everywhere these days. Are they a legitimate option?
They can be, especially if you need funding quickly or if you're looking for like a short-term loan.
Okay.
But it's crucial to do your research, compare rates and terms from different lenders, and read the fine print carefully.
Uh-huh.
Make sure you understand the fees involved and those repayment terms.
So proceed with caution, but don't rule them out completely.
Right.
What other alternative funding sources are there?
Well, you might consider community development financial institutions or CDFIs.
Okay.
These are mission-driven lenders that focus on supporting underserved communities.
Interesting.
They can be a fantastic resource if you're in a specific geographic area or industry.
Okay.
And then there are credit unions. They're member-owned and often have more favorable lending practices than traditional banks.
Okay, so we've got SBA loans, online lenders, CDFIs, and credit unions. That's quite a range of options. What if we're talking about like a bigger investment, something to really fuel rapid growth?
In that case, you might explore angel investors or venture capitalists.
Okay.
These are individuals or firms that invest in promising businesses in exchange for equity.
So it's not just about borrowing money, it's about bringing on partners who really believe in your vision?
Right, but be prepared for a pretty rigorous vetting process.
Okay.
Angel investors and VCs are looking for high growth potential and a solid exit strategy. They want to see that their investment is going to pay off in the long run.
And let's not forget about crowdfunding. That's become such a popular way to raise capital, especially for startups and creative projects.
Absolutely. Platforms like Kickstarter and Indiegogo allow you to tap into a much wider pool of investors, including your own customers and supporters. It's a great way to validate your idea, build community, and generate some buzz around your business.
So many possibilities. I love how this opens up like a whole new world of opportunities for businesses that are seeking funding. It's not a one-size-fits-all approach. It's about finding the best fit for your individual needs and goals.
Exactly. And remember, securing funding is just one step in your business journey.
Right.
The real goal is to build a sustainable business that can really thrive in the long run.
That's such a great point. We've covered a lot of ground today, from credit scores to cash flow to all these alternative funding sources. But before we wrap things up, I want to circle back to something you mentioned earlier, building a strong foundation. Why is that so crucial, even beyond loan approvals?
Yeah, it seems like building a strong foundation is about creating a business that's valuable on its own, regardless of whether you're like actively seeking funding or not.
Right. You hit the nail on the head. When you have a business that has strong credit organized documentation, healthy cash flow, and a proven track record, that's a valuable asset. It gives you options.
Yeah.
Put you in the driver's seat. That's a great way to think about it. It's like you're building a business that's so attractive, so well run that funding becomes a choice, not a necessity.
Exactly.
Yeah.
And that kind of confidence can be a real game changer.
Totally.
When you believe in your business, other people are more likely to believe in it too.
That makes a lot of sense. So for our listeners out there who, might be feeling discouraged after a loan rejection, what's the most important thing they can do to kind of shift their perspective and start moving forward?
I'd say the key is to view those rejections not as setbacks, but as opportunities for growth.
Okay.
Each rejection is a chance to learn, refine your approach, and make your business even stronger.
It's like that saying, what doesn't kill you makes you stronger.
Right.
But in this case, it's not just about surviving.
Right.
It's about thriving.
Precisely. And thriving starts with taking ownership.
Yeah.
Ask yourself, what can I control?
Mm-hmm.
You can control your credit, your documentation, your cash flow, and the effort that you put into making your business the best that it can be.
It's about focusing on what you can influence, not dwelling on what you can't.
Yeah.
So often we get caught up in things we can't change, but this is a good reminder that we have more power than we realize.
Absolutely. And that brings me to kind of a final thought-provoking question for you and all of our listeners.
Okay.
We've talked a lot about convincing lenders, but what steps can you take today to increase your business's value, regardless of external funding?
That's a great question. It's like flipping the script entirely. Instead of chasing after those loans,
Right.
we're building a business that's so strong, so desirable, that the money comes chasing after us.
Exactly. Remember, securing funding is just one piece of the puzzle.
Yeah.
The real goal is to build a business that's not only profitable, but also sustainable, resilient, and ultimately fulfilling.
Couldn't have said it better myself. So to all our listeners out there, whether you're facing loan rejections or just starting your entrepreneurial journey, remember this. You've got this with the right knowledge, the right strategies, and a whole lot of grit. You can achieve anything you set your mind to keep learning, keep growing, and never give up on your dreams.
And never underestimate the power of a deep dive. Sometimes the most valuable discoveries are found when you're willing to explore beneath the surface.
That's the truth. Thanks for joining us on this deep dive, everyone. Until next time, keep exploring, keep questioning, and keep pushing the boundaries of what's possible.